You have one precious life. How will you make your money work for you? It's time for Sage Money Conversations, where your financial happiness and confidence are always the subject. Here's your host, certified financial planner, Barbara Norman.
Hello, and welcome to today's episode of Sage Money Conversations. Today we have with us Ollie Benn. Ollie is the Director of Philanthropy and Social Impact at the Jewish Community Foundation of San Diego. I think you're going to find today's discussion delightful as we kind of explore some of the really cool things that are going on in San Diego, the mindset of giving, and then also some unknown tax breaks for giving. And so stay tuned to the end because you're going to learn how to save some taxes where you otherwise might not be able to. As a reminder, you can always get more information about planned giving by going onto our SagePath Solutions website, clicking on the Learning Center, and finding the articles that look good to you. While you're there, be sure to subscribe to our newsletter, and you can always book a meeting with me to learn more about tax breaks, planned giving, and how to bring passion into your financial plan. And all you guys are doing some amazing things. I've been to some of your fundraisers and events. Tell us about some of the projects you have going on at the foundation.
Sure, thank you, and thank you for having me on today. This is my third podcast of the year, and it's also my third podcast ever. So I'm feeling like the love right now. So thank you.
Thank you.
So the Jewish Community Foundation here in San Diego, I mean, we've been around since 1967, and we currently have about $800 million of assets under management. So that's individuals, families, and some nonprofits who trust us with their endowments. And so we've, gotten the reputation in the community as a very careful and conservative steward of, philanthropic assets, which are some of people's most important treasured assets because it's what they've spent their lives accruing. And so we are always looking, our mantra is that we believe that every individual can make a difference and that together we can change the world. And so we're always looking for new and interesting ways to help donors, which are, everyday folks, to make a difference and have the most impact possible with their philanthropic dollars. So that could be, working one-on-one with donors who have a particular passion in a particular area. That can be working on, highly complicated assets that they need to donate because for whether it's for tax reasons or other reasons. And we've accepted all manner of exotic assets at the foundation. But it can also be, how do we play a role as a community foundation to make, to use some of our expertise to make the community a bit of a better place.
And so before we jump into tax, tell us about some of those projects you're working on.
Yeah. So, the one that I feel like I should mention that because also we had a beer over it it's called Give For. So that's GIV, no E, and then the number 4.org, give4.org. And so this was our attempt to get everybody in San Diego participating in the solutions to homelessness. Mm-hmm. So one of our insights was that people care greatly, obviously, about complicated issues like homelessness, but don't necessarily know where to begin or how to get involved. And so they either get overwhelmed and just, do nothing, or they'll give to, the one organization that they're familiar with. But people want to do something and want to have an impact on these big areas, but it's just so overwhelming and they don't know where to begin. So we created, with some philanthropic homelessness experts, we curated this fund of 12 nonprofits, each having an impact on different aspects of homelessness. Make it really easy to give into that fund. You can give from a DAF, you can give with cash, credit cards, stock, however you want to donate. And then what we're doing that's a little bit unique is each month we're telling the stories of one of these 12 nonprofits in the fund. So over the course of a year or however long you're with the fund, you get to learn more about different aspects of homelessness. And so you are becoming better educated over time on the solutions to homelessness.
Yeah, and I was impressed. So yes, when we had that beer over at Give For, what you're doing for youth, homeless youth, is amazing. The music program, well, yeah, they talked about, hey, if you show up here so many times, we're just going to give you this instrument. It kept people and kids engaged in the program where you could look after them and give them some skills and just music and art. And what are some of the other places you're touching?
Yeah, so you're referring to Doors of Change, which is a wonderful organization. Another one actually is YWCA because of the Becky's House, which deals with victims of domestic abuse who have been forced
Yeah.
out of their homes. So when you start to think about homelessness, there's so many different aspects to it. One of our other favorites in the fund, I mean, they're all our favorites, obviously. Uh, but, there's some really creative solutions to homelessness out there. So one is called YIGBY, which stands for Yes in God's Backyard. So that's the opposite of NIMBYism, which is no in my backyard. And their insight is that there are thousands of acres of unused or underused church land in San Diego. Because churches own, a lot of land that they've just had for a very long time, and it's being underutilized. So they're in the process of converting this parcel that has two small properties on it into I believe it's a 25 unit housing complex in Logan Heights, where they're going to be housing homeless veterans. Especially homelessness, yeah. And so that project is beginning to get underway. So YIGBY, just another example of, we've got to try all kinds of different solutions to tackle this incredibly large crisis in San Diego. And so, so these are the kind of stories we are telling through this program.
That's wonderful. Well, talk a little bit about the mindset. We're talking about, the mindset of someone who wants to give. Is it from the heart? Is it because of taxes? Tell us a little bit about who comes to the organization.
Yeah. Even though we're the Jewish Community Foundation, 70%, somewhere between 50 and 70% of the grants, in other words, the donations made from the foundation, actually go to secular or non-Jewish causes. So I think that's a reflection of both who our donors are, because they're not all Jewish, and also the fact that, even the donors who are Jewish live in San Diego, care about San Diego, and want to see the best for San Diego. So in terms of mindset, I think studies have been done, like national studies have been done on this, and you would have thought that taxation would be like the number one reason, avoiding taxes would be the number one reason why people give. And it actually ranks as, third or fourth. And the number one reason people give is because they see problems in their community or they see issues that they care about and they want to make a difference. And not only that, but I think the number two reason is giving feels really good. I mean, they've done studies on people's brains, MRIs or functional MRIs. And, it really does feel good to give, and especially to something that you're connected to or have some relationship with. So, once you get into a habit, and philanthropy is very much a habit, once you start, it becomes quite addictive. And we have donors who, are just trying to have the most impact they can. And that's how they, dedicate a small portion of their assets and a small portion of their week to thinking about how they can have an impact, because it really is something that just feels good and does good in the world.
Yeah, it really does. I know I'm listening to you think, and I'm thinking about all the organizations that I give to on a monthly basis, and I can't cancel them because I just love them too much. And you're right. Giving in our local community is what makes me happy, because it's here, it's home, it's our home, and we do want to see it get better.
Yeah.
And we think about, too, like we were talking earlier about Mackenzie Scott, right? Jeff Bezos' ex-wife, who is literally giving away billions of dollars, just can't give it away fast enough. And I think there are some new mindsets that we just have so much. And we talk about the income disparity. We talk about kind of the injustices of the world. And this is how we're hopefully going to change it little by little.
Yeah. And I'm glad you brought up Mackenzie, because I think one of the hesitations that people have in giving is, this very old notion of the money's all going to get wasted. I don't know where it's going. It's all going to go to overhead. And Mackenzie Scott has taken the exact opposite approach, which is, obviously she hasn't revealed what her process is, but it's known that she vets organizations through, a network of trusted individuals. But once they've sort of met that initial, very high level vetting, she just gives the money to them with no strings attached. She doesn't even, my understanding is she asks for very little in the way of reporting afterwards. And the idea is, the most of the nonprofits today that are, doing okay, doing well, having an impact in the community, you have to trust them to deploy their assets or to deploy, the philanthropic dollars in the way that they see fit, because they are the best stewards of their money. And overhead is a fact of life because you need someone to answer the phones. You need someone to, file their, admin reports and their accounting reports. And yet, these are organizations that are all having an impact in the community. So, I think, Mackenzie is very much leading the way on this. There's a movement away from I need to know that exactly how every single dollar is being spent to, I can see the impact this organization's having. I'm going to trust them. And I think that's a big part of the shift in mindset that's happening too.
Well, and I think that's huge. I mean, we've heard these nightmare stories coming out of Red Cross and, the improprieties. But when I think about giving, yes, I'd rather give to an organization that's in a building, has a phone, has computers, has staff, rather than someone working from their home who says, I'm doing good with money. So I think overhead has gotten a little bit, that analysis out of hand. Yeah. So another thought, and so we've got the mindset of, yes, we want to benefit underserved communities. We want to help women, children, drug addicts, veterans have a hand up. But then there's also the tax aspect of it. And let's talk about that, Ollie, because I don't think the education for the tax benefits in philanthropy has gotten enough attention, especially now we've changed the tax laws, right? And most people don't get to itemized deductions anymore. They go with the standard deduction. So the question is, if I can't get the deduction, why give? Well, there's so many other opportunities. And so we can talk a little bit about those.
Yeah. So, I think the first thing to say is, especially if you're in a high tax state like California, if you are paying a mortgage and paying property taxes, and again, obviously, I can't give tax advice and financial advice. I think you can. You are probably going to be, it's at least going to be worthwhile considering whether you can itemize. But even if you can't, there are a variety of vehicles that you can take advantage of. One of the, and, with respect to donor advised funds in particular, which is the main vehicle that community foundations use, one of the most advantageous things you can do is if you have stock that has appreciated, so shares in, Microsoft or whoever. So let's say you bought that stock at $10 and now it's trading for $100. If before you sell the stock, you don't want to sell it, but if before you sell the stock, you donate it to a donor advised fund or to any individual charity, frankly, you get the tax deduction for the full amount of the appreciated stock. So in my example, $100, and you pay no capital gains tax. So you can avoid all the capital gains tax and you can get a huge tax deduction at the same time. So it is a very, very advantageous way of giving, whether you have, appreciated stock, cryptocurrency, even a physical asset that for some reason is going to have some tax implications. We had somebody who made us go to a gold dealer with him recently. And he literally had I think they were Krugerrands in his backpack, and we sold them for him. Apartment buildings, we've actually taken interest in apartment buildings. So appreciated assets are a very, very tax advantage way of giving.
Right. So, and that's huge. So let's use your example. I buy a stock for $10 and now it's worth $100. If I give it to the charity, I have given $100 and I get the deduction for $100, like you said. But the biggest thing is if I paid $10 for it and now it's worth $100, right? The gain on it was $90. And if I have to pay capital gains tax on it, 15, 20% plus state income tax is 6 to 9%. Literally, it cost me $10 to buy it, but I'm saving, if I give it to you, it's tax savings of $30, $40.
Yeah.
That's crazy. So for $10, I was able to save $30 or $40 in taxes and give you $100. I mean, it's just huge.
It really is huge. And thank you for explaining that. I think you did a better job than me, even though it's,
okay.
even though it's my job. So it really is something that if people aren't aware of that, it's, or they happen to have been sitting on something for a very long time. The key thing is not to sell the stock yourself. You want to transfer it via your broker to a charity before you sell it, in order to take advantage of that tax deduction.
And you brought up another one. What if I give an apartment building to, the Jewish Community Foundation? Well, I'm sorry, Ollie, I'm a single woman. I just can't do that. I still need my retirement. Would love to give you that building, but let's look at it. It's okay, the building's getting old and decrepit. It needs repairs. I'm having a hard time collecting rents, and I really don't want to do this anymore. So what are my options? I can sell it and pay large amounts of capital gains. Not good for me, not good for the IRS, not me. I could do an exchange on the building, which means I'm just giving up this problem for another problem, but I avoid taxes. Maybe I have to spend more money now to get into a different building, higher property taxes. Okay, still, I'm not having a fun time with this thing. Or the biggest thing is, right, I can give the building to you.
Right. Or an interest in the building. I mean, you may not be able to give away the entire building, but you want to, offset some of the tax. Yeah. I mean, and again, we're not the only ones who do this, but, over time we've developed some expertise in it. And yeah, it's another way of making sure that you are, maximizing both your charitable intent and also, avoiding as much tax as you can, unless you really like paying money to the government.
So, but right. And then if I do that with like a charitable gift strategy, I gift you the building, you sell it. In exchange for that, I get a tax deduction, which is huge. And then now if I do that gift annuity, I get the income from that till I die. And what's left goes to you, the charity, after the fact. And so here I had this building that was an albatross around my neck. And all of a sudden I have benefited a charity. I've gotten a huge tax deduction. Now I've got a lifetime income. Yeah. If I want to take some of that money, buy a life insurance policy, I can make sure that my kids still get something out of a deal.
Exactly. And I think what you just said, it reflects sort of because some people might be like, I don't have an apartment building. I don't have I'm not as, who's this person that bought Microsoft at $10 and is sitting on, now $100 of gains? I'm not that person. Anyone who's going to be sitting down and talking to their financial advisor, all I think you need to do as the individual or as the client is say, look, I want to do something for charity. Like, here's approximately what I'm thinking. And there's all kinds of vehicles for that. So, I mean, you just mentioned a, charitable gift annuity, which, basically is like, I really can't afford to give much now, but I'd like to give, I have an estate that once I pass away, I'd like that to go to charity. There's a vehicle for that. And so you could have income during your lifetime and then, still have the charitable intentions fulfilled. Some people can't afford to give anything now, but want to, as part of their estate and trust plan, want to, leave a legacy behind for, their what we call their afterlife giving, which I still find a weird expression. But, so I think the point is because a lot of financial advisors and planners, I mean, you Barbara, well ahead of the game on this, but, a lot of financial advisors, they think of philanthropy and charity as like the nice to have conversation if I get to it. But I think you as a client, if you go to your financial advisor and say, I want philanthropy to be part of my estate and my estate plans, they will either know what to do or they'll work with folks like us to create that vehicle for you. So it's really, I think the onus is on, to some degree on you as the individual to, when you're having those, financial planning conversations, to say, I really want to talk about charity because I think that's important to me.
Yeah. Me too. And you're bringing up like the afterlife gifts.
Yeah.
I see when I sit down and review trusts and even some tax returns, I see some of the biggest mistakes ever. And that's because they are, and I'm going to pick on IRAs now, my favorite thing, but I'll see in these estate plans of give my IRA to the kids, and in their trust, they'll say, give the Jewish Community Foundation or the hospital, give them assets. Now, I'm going to get a little bit technical here, but this is crazy because you're giving assets that are fully taxable and have to be spent down in 10 years to your kids, which is going to probably kick them into a higher tax bracket. They may not want the money right now, but too bad they have it. And then over here, it's like, well, sell the house and I'm going to give some money to a charity. You're giving those assets that get what we call that step up in basis, but you're almost giving tax-free assets to the charity and you're giving taxable assets to the kids. And I'm trying to get people to think flip of that. What if we named the beneficiaries in our kids and the charities? Anytime I want to change a beneficiary, all I have to do is call the institution, change my beneficiary. I can change the percentages. I can change them out. But if it's in my trust, to call an attorney and do an amendment? Are you kidding me? So.
Well, yeah. Again, you are ahead of the curve on this, Bob, because, I think a lot of, especially like estate and trust planning attorneys, not to pick on them, but they're only thinking about the stuff that goes into their documents, and the IRAs don't go into their documents, and so they're not thinking about the whole estate. There's an and that I want to put in there, which is you can very easily, and we do this. I mean, literally, we've done this for thousands of clients. You can give, it's literally a paragraph that you put into your estate plans that say, I want X percentage of my estates to honor my charitable intentions, which are documented at the Jewish Community Foundation or wherever you have your legacy plans. And then anytime you want to change that up, 5% to this charity, 10% to this charity, you just give us a call and we change it for free. So you don't have to pay a lawyer to update it. So there are ways.
Something that's cool.
Yeah, no, yeah. So on your big picture point, which is you've got to think very strategically about which assets are the ones that you want your charity to go from. You're absolutely right that IRAs, there are some vehicles that are just much better to give from, or some types of assets than others. And your accountant or your estate planner may not necessarily be thinking about that as strategically as they could. And so you're already thinking about that. But on the smaller point of the stuff that's in your estate, you do not need, if you put in the right instruction in your estate plan, you don't need to pay your lawyer every time you want to change who you're giving your charity, which charities you're giving money to.
You're taking away from the fee annuity of estate planning attorneys here.
They're doing just fine.
And I think too, the other low-hanging fruit where I see a lot of mistakes is if I have to take a required minimum distribution. A lot of my clients are like, I don't want this money. It's driving my taxes up. It could drive up my Medicare premiums. Like, no, but the IRS is saying, no, you must take those. And now we have this QCD, Qualified Charitable Distribution, where it can go directly from the IRA to the charity. And so again, I see people like taking their RMDs, they write a check to the church and off it goes. And it's like, you just missed one of the best tax deductions ever. It's whether you itemize or you take the standard deduction, it's the best thing going is to just give it directly from the IRA to the charity.
Yeah, no, yeah, the ability of the qualified charitable deduction to offset the income tax is, it's a huge advantage. And yeah, people should be looking at that, thinking about that and taking advantage of it.
Yeah, I just had a client she got her 1099 from Schwab, but the accountant didn't put the $5,000 charitable donation on her tax return. She was complaining about her taxes. And I said, give me that thing. And I wrote a note to the CPA who redid it, saved her $1,500 in taxes.
Wow.
It was awesome.
You need a CPA license as well.
No, thanks. Ollie, you talked about, we talked a little bit about some of the charitable vehicles, but you've mentioned now the word donor advised fund a couple of times. Tell our listeners, what is a donor advised fund?
Sure. So a donor advised fund is the best way to think about it is your charitable savings account. So let's say, using one of those examples before, like let's say that you either had some appreciated stock, or let's say that you needed to put a little extra money away in 1 year for tax reasons or for whatever reasons you are, but you don't know where you want to give that money away to straight away. We have what are called donor advised funds, as every community foundation and lots of other institutions have. And so what happens is this money is now housed by us and sitting with us, but it's your account. So whenever you say, I want to give, so let's say you put, it could be 5,000, 50,000, 500,000. Okay,
let's put 50,000 in this account.
Yeah. So let's say you've put 50,000 in this account. You can then say to us, I want $5,000 to go to save the animals or whatever it is. And we take care of all the donating for you, all the paperwork for you. And instead of having to keep track of all those different tax receipts, you get one tax receipt. And by the way, so you let's say you put that $50,000 into your donor advised fund. That is the event where you get your tax receipts.
Okay.
And so basically, like, you could give the money away over several years from your account, but you are taking the tax benefit in year one. So that's a big advantage to having donor advised funds. And not only does the money, get housed by, in our case, the Jewish Community Foundation, we will then invest that money for you so it appreciates over time. So let's say you put $50,000 into your account, it could grow by, 3%, 5%, 7%, 10%, depending on how you have it invested and what's going on with the market. And so you can actually have more money to give away over time. Or let's say you put, $50,000 in and you decide to spend out 5% of that money a year, it's quite possible that the market appreciation will actually take care of that $5,000 or that 5% that you're spending every year. And so you can keep on giving, in perpetuity. So it's a really interesting vehicle that not only consolidates all your giving and creates one sort of central place to do that. You only have, you have the tax receipt in 1 year. But then also, we as a community foundation have a lot of opportunities to give that you may not have heard about otherwise. So we can become, we do research for donors all the time. It's what we do, completely for free to help them make the most impact with their money. If I could spend 30 seconds telling a story of something we did recently that I'm really proud of.
Tell us the story. Yes, I love stories.
Sure. And again, this is something that you will never read about anywhere because you'll understand why when I tell this story. So I had been on a webinar with some activists that were doing some work in around Ukraine, these volunteer activists a couple of weeks ago. And it was this mind-blowing call because these people were literally risking their own lives to get money. To get people out of the Ukraine, get food and medicines into the Ukraine, and to get people out. And it was a sort of trusted network that we had sort of gained access to through some of our connections. And you heard these stories and you just heard the sincerity and the trust and just the way these people were working. And it was just extraordinary. It was absolutely incredible. And I tried describing it to some of the people at the foundation. And I was like, I can't possibly describe this to our donors because you have to hear these people. You have to actually, see what they're saying and sort of understand the impact they're having for yourselves. So we arranged this confidential briefing. It was completely off the record. We had over 100 people attend. And basically we came up with an arrangement with this local 501c3 nonprofit where we would communicate to them whenever someone had made a gift so that they could get money that day to the Ukraine, which is donor advised funds never work that quickly. It was amazing. And so they were saying, we need $10,000 to get a bus into some of the slightly less dangerous places to get people out, to get a busload of people out. We need $25,000 for drivers to get to the more dangerous places to get people out. In 2 hours, we raised $350,000.
Oh, wow.
And we raised over $500,000 overall. And literally that was a day where we all came together to save lives. And we have the stories of the folks whose lives were saved, people who were able to get out. And this is one of those things that I literally had a donor calling me crying, a guy, he was crying to the phone, down the phone because he was so moved by this call and probably wrote the biggest, philanthropic grant that he's ever written. And it's just those kind of opportunities that, that it's our job to be aware of what's going on. And it's our job to help the people that have donor advised funds with us have impact just like that. So, that's one of those stories that I will probably tell the rest of my career because it was one of the days where we really got to make a huge difference.
Yeah, I was involved in a fundraiser like that, and the money went straight to Lithuania, where the Rotary was same thing, buying what they needed, driving it to the border, driving refugees back. It just makes my heart so happy to see what's going on. Ollie, tell our listeners how they can find you. How can they learn more about what's going on in these giving opportunities so that, gosh, when something like this pops up, whether it's homelessness or Ukraine, how can they find out about these opportunities?
Yeah, absolutely. So our website is just jcfsandiego.org, as in Jewish Community Foundation, jcfsandiego.org. My email is Ollie, Ollie, @jcfsandiego.org. If you're interested in that homeless initiative that I mentioned before, it's Give4, so that's GIV and the number 4.org, no E in there. And you can also find us on social media as well. But we're happy to talk to anybody, while, people associate donor advised funds with, ultra high net wealth individuals. You can open a fund with us for as little as $1,800, which, isn't affordable for everybody, but, for a lot of the people that are listening to this call is probably within reach. And so, we're always happy to help people figure out what their passion areas are and how we can help them make the most impact.
I love that. Well, I would certainly rather give it to an organization like yours than the IRS. And so we're going to keep exploring ways where we can save taxes and feed some passion for making our world a better place.
Thank you. It's a low bar to compare us better than giving to the IRS, but I know what you mean.
I don't think it's a low bar at all. Do you have any pearls of wisdom for our audience before we drop off?
I would just say that I mentioned this before, but giving and philanthropy it's a habit, and it's a habit you get into. And I would say if you don't know where to begin, just do something, just give somewhere and see how it feels. See what kind of, thank yous you get back from the organization, see what they do. Don't overthink it. Just start somewhere and you'll feel rewarded. I can assure you of that.
Yeah. Ollie, thank you so much for participating. It sure was delightful having you on.
Thank you. Always fun, and look forward to doing our next event soon together.
Me too.
Advisory services are offered through Barbara J. Norman, LLC, an investment advisor in the states of California and Texas. The information contained herein should in no way be construed or interpreted as a solicitation to sell, nor an offer to sell advisory services to any residents of any state other than the state of California, or where otherwise legally permitted. All content is for information purposes only. It is not intended to provide any tax or legal advice or provide the basis for any financial decisions. The information contained in this material has been derived from sources believed to be reliable, but is not guaranteed as to accuracy and completeness and does not purport to be complete analysis of the materials discussed. The opinions expressed do not necessarily reflect those of SagePath Solutions and are subject to change without notice.